Hello friends, and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about a very interesting company, Nureca, which can be big from here in the years to come. So let's understand about the business. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Nureca, here's a small request. You can support me on Patreon, and once you do that, it will help me grow the channel. Help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. Plus, if you can pay $100 upfront, then you get 1 year access by paying for 10 months, so that's a 20% discount. For detailed market or company talk, you can directly email me and we can work things out. Now about the company, Nureca was established in 2016 and it produces a range of medical equipments. It is a B2C company engaged in the business of home healthcare and wellness products. Products that include are in the category of chronic diseases, orthopedic, child and mother care, as well as lifestyle related products. So a very diversified medical related company that has been recently listed in the market and has been doing appreciably well post the IPO. Some products are pulse oximeter, weighing machines, BP monitors, etc., which are in high demand at the moment. A market cap of 1800 crores, and that is what is attractive about this business, that the market cap of the business is extremely low. If you look at the financials, so these are Q4 numbers. So we see that sales were flat, but look at the profits. So profit from 2 crores has jumped to 3 crores. That's a 50% jump. So you can understand that it's not a very big company producing very good, huge, you can say, sales or profit numbers. One, you can say, drawback of the company is that the stock is so if you take in sales, so it's around 120 130 crore sales against 1800 crore market cap. So in that regard, it is trading at 15 times earnings. So that is a slightly, you can say, off, that people might not like, that it is trading at 15 times earnings. So it looks expensive, but the business per se looks very good. So decent promoter holding, return on equity of around 52%, operating profit margin is of around 13%. If you look at the performance, the company has become very prominent quickly. So it is a very recent listing, but nearly doubled from listing price. In fact, it has gone beyond doubling from its listing price of around 800, 850, 850, 900, or round about that was the IPO price. So it has nearly doubled from there. Has been in existence for only 5 years. So it has come into inception only 5 years ago, and it has been doing well. So the pandemic has helped it accelerate the growth, and the numbers are coming in. But at the ROE of around 50% is quite magnificent. So in that regard, I feel the business could continue to grow further in years to come. And although valuations are stretched, we can look at buying on massive declines in the market. Profits have consistently increased over years, so from some lakhs now it has gone up to 3 crores or so for a quarter. So that's around 10-12 crores for the year. So that is how the growth in the profitability has been. So why I believe it can be big in a few years time. Products are innovative and helpful for patients. They are more into oximeters and BP monitors, and people are now, so the penetration of it is less at the moment, extremely less. And so going forward, say 4 or 5 years down the line, it would increase because people would like to check their blood pressures or oxygen levels, etc., SpO2, pulse, etc., at home rather than going for a doctor checkup for that. So I think that is going, these products are going to be household, unfortunately, across India, because of an aging population, because of the illnesses we are seeing. So this business could continue to perform. It's a high margin business once it starts gaining market share. it will start gaining margins, etc. So they'll be able to negotiate margin and pricing much better. And market cap is extremely low for such a business, 1800 crores. So I believe this can easily be a 10,000 crore, 15,000 crore market cap company going forward, say in the next 4 or 5 years. And good level of HNI and FII interest is being seen in such a small company. Normally it is not seen in such companies, but here in Nureca it is being seen. So that also gives confidence that the business per se is pretty strong. So what are the risks? Basically? Valuations are stretched. So that is one point I want to make here. So at 80 times say P, and it is also trading at something like 20 times, 15 to 18 times sales. That is something to be worried about, absolutely, because in that regard valuations are stretched, and I look for value in businesses, but the business per se will continue to perform. So what one needs to do is have a strategy of buying into this stock rather than going ahead and buying in a lump sum at this point of time. So would look to buy on declines. That would be the strategy. So at the moment the stock is extremely stretched. There's a medium barrier to entry into the industry. So it's not that other companies cannot make such kind of products or cannot sell such kind of products. So margins here are not that great if you don't have market share. But the fact is that over the last 5 years it has done extremely well and gained market share and did pretty well over the last 5 6 years since its inception. So I believe that it's going to perform even better as things change, as lifestyle changes. So market may reverse and nosedive, so that would be an opportunity. So this is the risk at the moment, that these stocks and all these elevated stocks, be it in delivery counters, be it in pizza, be it in other food products, medical equipments, medicals, healthcare, etc., and many other sectors, everything is elevated. So in that sense, we could see a seminal decline, a sectoral, a complete decline in the market, and probably that would be the opportunity to get into the stock. If you look at the technicals, then very strong on charts, and the short term support lies around the 1500 levels, 1480, 1500, 1520. A deeper support is around 1350. Remember, it has been a recent listing, so very less technical data is available with the stock, but I think declines to 1300, 1350 from these levels, around 20% from the current levels, would be very good levels to start accumulating. And between 1350 to 1000, if you get it on very bad days, those will be the time to probably buy into it, and I think those valuations would be apt to get into the stock. There's a major breakout that is expected above 2000, then we can look at 20-25% upside straight away in a few months towards 2500. So you need to look at those levels. Probably 1500 to 1300 would be a level to start accumulating the stock, because valuations are at the moment looking stretched. What if they come out with decent numbers over the next 2-3 quarters? Then the valuations may not look that stretched. So I think 1350 to 1400, 1200, those will be good levels to get into the stock. So what needs to be done? So one can start to accumulate on declines and build positions over time. Don't hurry up on buying into the stock straight away. It can be a consistent performer going forward, but the numbers could be up and down once this pandemic ends. So you'll get enough opportunities to get into it. But once it surges past 2000, I believe we can see a 25% upside in the stock. So this was my video on Nureca. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.